guys, I'm looking at this trade right now, Arweave. I'm already in a long from pretty much the previous week low, but I'll be looking to add if we get this set up. So the way I'm sizing up the trade, or I'm framing this range, is you have a big push down here. This displacement lower basically took out that low, and then what you're looking for on the right side of this is another short-term low to get put in. Then this would be a potential high resistance liquidity run with a failure to displace below A right over here. So short-term low, long-term low, short-term low, and then run. The reason I'm looking at this specific zone right here is you have a liquidity pool that's been built up over the last week. So this is your previous week low. Over here it was our first pivot to go higher. And you can see they left it in the zone for quite a while. So I always look at time more than price. And like there's two ways of interpreting it. Time versus price, that paradigm is, you know, there's certain days and times during the week where you expect volatility to pick up and volume to come in the market, and you're looking for time to match up with price. I also look at time relative to price. How long was price in this zone? Meaning how long did participants have to get in the long before actually moving up? So if they stall in a range and they give average retail participants too long to get in the long, then it's basically a footprint, because they're committing liquidity for the market maker to come back and take at a later date. So this is another example of time and price. So because this zone, they spent a lot of time here, I'm waiting for price to come in and grab this entire zone and then form the higher low. What it would also be is from here to here, this would be a reclaim of the previous level. Also, if you fib out from the low to the current high, this would be in your deep discount fib zone. So 786 to 886, this would be right at the 786. So that would be a pretty good area to roll the dice. Also, if you zoom out, in this whole range, so we've had a pretty, this range has been developing since February 27. So this is a multi-month range where we're basically going back to the low or the value area low. So this right here, this range value area low, you want to see it hold over here. And it just looks like it's reactive. That was the first interaction with it. Another one right there. And then over here. So you want to see anything that drops into the range get absorbed. You want to see a quick wick and then close back above a 4-hour candle, back above the value area low, and then people start bidding up. Now if that does happen and we do get a liquidity raid in the zone and we do close back above the value area low, I'll have a lot of confidence to go in long here just because the wave structure is really clean. So from X to A to B, that's your first wave. It's just around the 50%, 44% mark. Higher low, I'm projecting to the 786. Again, this didn't happen yet, but if it does, this would be a pretty good wave structure because you'd be looking at the 886 to close the harmonic. And then the idea is this potential reversal zone I have up here maps the 886 at the bottom and encloses the 2618 at the top between B to C. So if you project out B to where you think C might go, and I use the standard fib, what did I do wrong here? I guess this is a little bit higher, I'm off, but you basically want to see it go to the 2618. So if we get this harmonic wave, you also see there's a reason to go up. You have a huge inefficiency right there, and you have a massive liquidity pool just to the left. So on the 1 hour, same thing with time and price. This zone took a while to build, so they engineered this range for quite a bit of time. Up here, same thing. They didn't take out this external wick, and they engineered this zone for quite a while. You know, this was a couple days at least. So this would be a valid liquidity target to the upside. And then from here, you know, it can expand. If you zoom out, there's a ton of failed swings on the way up. That's your external high. These are all lower highs that didn't take out the previous highs. So you have a ton of liquidity, basically like trend line liquidity to target on the way up. So even though this is a small move, that would be a scalp. The mega long would be up to 49. I know it sounds ridiculous now, but I was shorting here saying $20, so that was just as ridiculous, right? So pay attention to this zone. I would set an alert just below this liquidity pool, and then watch the behavior. If you get a 4-hour candle close after taking this pool back inside of here, which is going to be your range value area low, then I would go ahead for a long. In my case, I'm going to be adding to it over here. All right, guys, enjoy your day. Cheers.